Are you a beginner investor? Do you want to sit back and watch your money grow while another person does the investing for you? Yes? Then mutual funds is for you. Hello everyone, my name is Flo. Welcome back to Flow Finance, where I talk about money matters and how we can improve our lives by investing in our future. Today, we are talking about mutual funds. Mutual funds is when you give your money to trusted investment managers to invest in various securities on your behalf. Investment managers are people who have gained experience over the years investing in diverse assets. They know a lot about the money market, they keep a close eye on the market indicators and make decisions on things to invest in to maximize yield for their investors. They understand the financial market more than you and I, and because of this, they've gained the trust of the members of the public because of their track record. The world of investing is a minefield, and as beginners, if you and I go in there ourselves, we may make very costly mistakes. So it's better to hand over the funds to someone who knows about it. When I say someone, I mean a company or an individual, because usually these companies they may start as one man that is doing it, and a group of people, they come together, before you know it, they form a company. So it's usually a financial institution. But yeah, inside the financial institution, you have individuals that know the job. As a beginner, investing can be scary. So instead of being afraid, instead of letting fear cripple you and stop you from investing in your future, you can let someone do it for you. In mutual funds, when you give your money to these investment managers, they can buy stocks with you, they can buy oil, they can buy a lot of things, whatever they see that has a potential to make their investors more money. That's what they trade in. All you care about is that they give you good returns. On the other hand, if you want to do it yourself, let's use stock as an example. Shares. You first of all need to find yourself a stockbroker, and then you go by yourself and do the research on any company whose shares you want to buy. Go and look at the indicators. Is this a good one to buy? Is this a bad one to buy? And then you send a mandate to your stockbroker and say, this is the exact share I want to buy. Buy these shares for me. In as much as your stockbroker may try to tell you or talk you out of buying that, if they feel that from what they've seen, the company is not doing well, that stock is not a good buy, they can try to advise you, but at the end of the day, the decision is yours. So they buy whichever stock you tell them to buy for you. And whenever you see another company whose shares you want to buy, you repeat the process. Of course, apart from finding yourself a stockbroker, because you already have a stockbroker. So this is the difference between having someone do it for you and doing it yourself. Don't get me wrong. Doing it yourself is good. That's when you learn. But some people may be putting it off. Some people are so afraid to do it themselves that they allow that fear to cripple them for a long, long time. So instead of allowing the fear keep you in one place without having a single investment, it's better to invest your money in mutual funds. That's all I'm saying. As you will see in my future videos, I'll talk about doing it yourself, because that's how I started. I started by doing it myself. But in mutual funds, your investment manager does not even contact you. They see what will be good for you. They invest in it without contacting you. You just stay on your own. The aim of your investment manager is to continue to make you money. Yeah, because when they make you money, you are more likely to leave your money with them so that they can continue investing. If you're making money, they're making money. Yeah, everybody is happy. Win-win for everybody. I think you get the picture of what mutual funds is. Many investment companies run different mutual funds with different names, but today, the specific mutual fund we're going to talk about is First Bank of Nigeria Fixed Income Fund, also known as FBN Fixed Income Fund. It is managed by FBNQuest Asset Management, which is a subsidiary of FBNQuest Merchant Bank, which in turn is a subsidiary of FBN Holdings Nigeria Limited, the owners of First Bank of Nigeria, the oldest bank in Nigeria. Do you see their CV? I've been a shareholder of FBN Holdings since 2007. That's more than 10 years, yeah, 13 years now. And if I can trust the parent company with my money all these years, and I'm a happy shareholder, not just that I held it for a long time. I enjoyed the dividends from that company. So if I can trust the parent company with my money all these years, I trust its subsidiaries to make good decisions with my money. The fixed income fund is not the only mutual fund that they run under the FBNQuest asset management. They have various other mutual funds. I'll put the link to the specific page where you can see all the different mutual funds that they run. But why I like the fixed income mutual fund is because it's very affordable. With as little as, yeah, I know that little is relative, but with as little as 50,000 naira, you can invest in this mutual fund. The good thing is that when you get more money, you can add to this fund to grow it. Remember in my last video when we talked about having the right mindset to give yourself a share of your salary every month. If you're disciplined about it, after your initial investment of 50,000 naira, every month thereafter, you take your share of your monthly salary and throw it into this fund. What they will do is they will include the addition for you, hence more yield for you. You keep doing that every month for as long as possible. Yeah. A mutual fund can be your retirement fund. Yeah, you make it a point of duty to be adding money to it every month till whenever. Yeah, it's a long-term investment. The FBN Fixed Income Fund started in 2014, and this is the history of their annual yield. Since then, you can call this annual yield. The annual interest, the profit, yeah, that they made with whatever money they were investing. It was 10% in 2014, jumped to 16.17% in 2015, fell to 6.38% in 2016. Look at the increase in 2017, 2018, 2019. And so far in this 2020, the special year, we all know what happened this year. The data for this year is not here yet because this year is not over yet. I asked them anyway, and they said that the year-to-date yield is 14%. That's for 8 months, January to August. This is the current month, August, which looks good for such a bad year. Okay, let me give you an example of earnings with actual numbers. These things do not make sense till you punch numbers, I tell you. Working with the 2019 data, in 2019, the yield was 20.6%. So someone that invested 100,000 naira in 2019 made, using the formula for simple interest, remember your math simple interest? You did not pay attention when they were teaching you this in secondary school, Abby. You have come full circle. You can't run away from maths in this life, eh? Simple interest is interest over 100 multiplied by the capital, which using the 2019 data is 20.6 divided by 100, which is equal to 0.206. Multiply that by the capital, which is 100,000. That will give us 20,600 naira. For someone that invested 100,000 in 2019. Because this is about percentages, the more money you have in the fund, the more money you will make. For instance, someone that invested 1 million naira in 2019 would have made 206,000 naira clean money. Unfortunately, you cannot predict what you will make in the future. You will need a crystal ball to do that. So you cannot predict from now. You can only go by the history, as you have seen here. These assets, these investments are affected by a lot of things. Politics, yeah, Nigerian government can make one simple decision today that will affect the oil market. Yeah, that's why it's good to have someone who knows about economics up there. Even the decisions made by other OPEC countries can affect all these things. Yeah, it tickles down. Even a pandemic can come from nowhere and mess up everything for us. Look at what happened this year. So it's unpredictable. I cannot sit here and tell you, oh, come and invest this amount of money in mutual funds and you will make so percentage by this time next year. No. Even the experts cannot tell you that. Whoever tells you, oh, come, by this time next year you make 20%, run 440, run as fast as your legs can carry you. Yeah, you cannot predict. cannot predict. You can see from the history, it goes high, it goes low, it goes high, it goes low. Nobody is qualified to tell you what you will make. Not to talk of an ordinary investor like me. Yeah, the experts can't do that. My job is to bring these investments to the limelight so that you know the kind of investments that the rich invest in that makes you feel like they mint money. Just imagine a rich person that invested 10 million naira last year. The person would have made a cool 2.06 million naira. And what of someone that invested 100 million the same last year? The person would have made 20.6 million naira cool cash while they sleep. But the good thing is that with as low as 50,000 naira, you and I can sit at the same table and invest in the things they invest. From the thousands, we'll keep adding till our funds grows to millions. Yeah, it's from thousands that you get to millions. Some of them started investing with thousands and now their money has grown a lot. Yeah, it's from Tanzania that you become a millionaire. But you will not become a millionaire if you keep waiting, if you don't start investing now. This investment can go towards your retirement, as I've said earlier. It can go to any project that you want to save for in the long term. Your money will grow instead of when you leave it lying around in your bank. Your bank is not going to pay you these kinds of percentages as interest if you leave the money lying idle in your account. One important point I need to make, even though I say it's good for long term, that you can take your money at any time after the initial holding period. For this fund, the fixed income fund, it's 90 days. When you invest for the first time, you must leave the money for 90 days before you can tell them, I want my money back. Yeah. After that, you can tell them, I want my money back, I'm not doing again, and they will give you back your money with any accrued interest. But if you don't want your money back, if you want to continue investing, anytime they pay you interest or dividends, you can either tell them to pay that interest into your bank account, which you must have submitted at the time of application. I'll put the links to the pages of this website, how you can contact them, how you can ask them questions, how you can tell them to send you a form and all that. Yeah, I'll put the links, and if you have any questions, feel free to ask them over there. So you can either tell them to give you the interest, to pay it in your bank account, or you can tell them to add it to your fund so that it will get bigger. So far, we've talked about treasury bills. That one is sitting at 3.something%. At the time I made that video, remember, the bid changes every 2 weeks. So you need to go to that website. I left the link on that other video. You need to go to that page to keep track of the current rates at any point in time. Yeah, they update that page every 2 weeks. And this one, based on last year's yield, is sitting at 20.6%. So far this year, it's at 14%. That's for 8 months, January to August. It can still go up or down by the end of the year, depending on what happens in the last quarter of the year. Yeah, we're still in August now, but will soon be in the last quarter, so anything can happen and will make the interest rate for this one drop. So it can go high or low, nobody knows. Yeah, but the 14% so far this year looks good. Based on these two videos, treasury bills, mutual funds, which one do you think is a better investment? Give this video a like if I explained mutual funds in the language you understood. That's another money market investment done and dusted. See you soon.